Ever wondered if your loved ones will truly get every single dollar from your life insurance when you're gone? Let's break down exactly how your life insurance payout works to ensure your family receives the full financial security you intended. The key to unlocking that full payout is your beneficiary designation. Think of your beneficiaries as the individuals or entities you explicitly name to receive your policy's death benefit. It's crucial to keep this information accurate and up-to-date. Life events like marriage, divorce, or the birth of a child mean your beneficiaries might need updating. If your beneficiary information is outdated, or worse, if no beneficiary is named, the money could go to your estate, which can lead to delays and probate. When properly designated, your beneficiaries receive the full death benefit amount as stated in your policy, intended to provide financial support during an incredibly difficult time. In most cases, this death benefit is received income tax-free, meaning your family gets to use the entire amount for their needs, whether it's paying off a mortgage, covering daily expenses, or funding education. Beyond naming beneficiaries, maintaining your policy is vital. This means ensuring premiums are paid consistently to keep the coverage active. A lapsed policy means no payout, leaving your family without that intended financial safety net. Regularly reviewing your policy terms and coverage amounts also ensures still meets your family's evolving needs. By completing your beneficiary designation correctly and maintaining your policy, you're not just buying insurance. You're securing your family's financial future and providing peace of mind when it matters most.